in the US dollar against the Japanese yen. We got a massive gap after the election surprise, and at this point there is speculation that the Japanese will end up being very dovish going forward. The British pound is skyrocketing against the Japanese yen as it now is reaching the 202.50 yen area. I think this is a market that, quite frankly, probably goes quite a bit higher. Mexico is the world's largest exporter to the United States. It's not China. Do keep in mind, this is a pair that will be intervened in by the Swiss National Bank. This is how they measure the franc more than against the dollar. So if the Swiss franc starts to strengthen way too rapidly, they won't hesitate to get involved. They've proven that more than once in the past. Hello and welcome to Hola Prime's Technical Roundup. My name's Chris Lewis. I'll be guiding you through the charts as we get to the end of the Monday session heading into Tuesday. Silver has been extraordinarily bullish as of late, and you can see that we are now above the crucial $48 level. $48 is an area that has been important recently, but the real prize, I think, at this point in time is going to end up being the $50 level. $50 is a level that's been important going back decades, and we have tried to get above there two other times. One goes all the way back to the late 70s, early 80s, and the other was about 12-ish years ago. At this point, it's worth noting that anytime we got near the $50 level before, silver got absolutely crushed and ended up falling precipitously. I'm not calling for that here, but I am saying there is some market memory above, and the easy money has been made for quite some time. Short-term pullbacks would make quite a bit of sense. Looking at the hourly chart, I think the $48 level continues to be interesting. If we pull back there and bounce again, maybe we spend some time going sideways overall. The gold market continues to be extraordinarily bullish, as you can see. And at this point in time, I think it's pretty obvious what we're gunning for. We're trying to get to the 4,000 level. There will be a lot of headline noise at 4,000. We'll be certainly hearing about it all over the news cycle. The websites everywhere will be talking about this. That being said, there are some areas that I'm watching to the downside for potential support, one of which would be $3,860. Zipping down to the 1 hour chart, you can see that not only do we have that level, but we also have the $3,900 level that could come in to offer support. Short-term traders continue to buy dips. Longer-term traders, they've just been hanging on to gold, and I don't think that changes anytime soon. I do recognize that $4,000 is going to be a massive level, and it's going to be difficult to get beyond, but eventually we should. At least as things stand right now, there's nothing out there that makes me believe that the fundamentals are going to change anytime soon. The euro continues to be very noisy, but quite frankly, I'm underwhelmed by the way the euro is behaving. Keep in mind that the highs were made during the FOMC press conference in the United States. We haven't seen those levels since. Now, I do recognize that there is a certain amount of support here for the euro. For example, one area I'm watching is 116. If we can break above the 1.18 level, then I think we could see continuation. But I'm watching that 1.16 level because if we were to break down below there, I think it opens up a little bit of a trap door down to the 1.14 level. Again, it's not exactly falling apart, but after being assured of some interest rate cuts, you would think that perhaps the US dollar would fall apart. That's not what we're seeing. The British pound is similar in the sense that it should be doing better, but it's not. And I do think that we are basically just hanging out in a somewhat noisy consolidation area between 1.33, which happens to be where the 200-day EMA is, and somewhere right around 1.37. So you'd be talking about a 400 pip range. That's not that uncommon for this pair. And right now we're just right in the middle of it. So very neutral looking indeed. The US dollar against the Swiss franc has been very noisy. It does look like it's trying to do something about bottoming, but it failed to hang on to the gains again during the session. I think you've got a situation where something big is about to happen in the US dollar. And once it does, we will see it everywhere. The 0.80 level continues to be very important against the Swiss franc. And we did test it. We have the 50-day EMA there as well. If we can break above there, then we'll almost certainly go looking to the 0.81 level above. On a breakdown, 0.79 makes a certain amount of sense. And in the US dollar against the Japanese yen, we got a massive gap after the election surprise. And at this point, there is speculation that the Japanese will end up being very dovish going forward.
We feel
I
the
don't
market
know
move.
that was
Every
ever
tick,
going to
every
not be the
candle means
case,
something
quite
to
frankly.
us. Because we
You
are
can see
traders.
that there
We know
is
what
an
it's like to
area
chase that
between
perfect
basically
entry, to manage risk
146
and
yen and
emotions.
151
That's why
yen.
we built
That's
Hola
been
Prime
important
Futures.
multiple
Real
times
traders
over several
deserve real
months,
rewards.
and I think
We
that
understand
continues to be
you
the case.
because we are you. We
Short-term
are
pullbacks would
traders.
make a certain amount of sense. On the hourly chart, you might even see a pullback to the 148 yen level to fill that gap. But over the longer term, if I'm going to be a buy and hold trader here, I want to see the US dollar break above the 151 yen level. Next up, we have dollar Canada. Now, this is a pair that I'm actually pretty bullish on, but I also recognize that we do have a barrier in the form of 1.40. It's a large, round, psychologically significant figure. And therefore, I think you have to assume that there's going to be something there in the form of resistance. We have just broken out of this little consolidation area with the 1.39 level offering support. We are getting ready at this point to see the 50-day EMA cross above the 200-day EMA, kicking off the so-called golden cross, which longer-term traders love. Now, keep in mind that Canada has a specific set of problems, not the least of which would be the U.S., but it also lost 65,000 jobs in the month of August, and it reports the jobs number in Canada this Friday. The U.S. is currently shut down as far as the government is concerned, so we don't necessarily have data incoming, although if they do in fact reopen, we could see jobs numbers from both the US and Canada this Friday. The market breaking above the 1.40 level opens up the possibility of a move to the 1.42 level. Short-term pullbacks, I think, continue to see buyers underneath, especially near the 1.39 level. The Australian dollar has been positive during the session here on Monday, but there is a level that I want to bring your attention to. It's the 0.6550 level. It's been like a magnet for price. We'll have to wait and see if we can continue to climb. If we do, then I think we're testing the 0.67 level. If we break below the 0.6550 level, then we start to threaten the 200-day EMA, which of course is a major indicator for trend traders. Anything below there opens up a drop to the 0.64 level and beyond. Keep in mind, Australia has been a major underperformer in the currency markets against the US dollar while the US dollar was selling off. Sure, the Aussie was rallying, but not the way the euro or the pound was. And therefore, it's already shown itself to be somewhat weak and feckless at this point. Up next, we have the euro against the British pound. The euro, of course, has been rallying against the pound, but we are starting to see a lot of resistance in the neighborhood of 0.8750. The question is, are we forming some type of ascending triangle, or is this in fact a bit of a triple top? We'll just have to wait and see, because this pair does tend to be a bit of a grinder. But I would say this. I'd say if we continue to fall and we can somehow break down below 0.86, this is a market that could really start to fall apart. We'll have to wait and see. I think ultimately the euro itself is not necessarily very attractive at the moment, so I would not find it overly surprising to see it fall from here. We have some work to do before that happens, though. If we break above the 0.8750 level, then it could open up a move to the 0.90 level over the longer term. Again, this is more of a grinding pair as opposed to a quick moving one, so keep that in mind. Up next, we have the euro against the Swiss franc. You can see very choppy, as it typically is. And we do have a border of 0.95 on the top. And on the bottom, it's a little squishier, if you will, showing signs of support right around the 0.92 level. And spending most of the time, quite frankly, somewhere right in the middle, just kind of going back and forth. I think this is a market that you're very neutral with, but if you are a short-term trader, you may find some value here at 0.93 to buy and 0.9380 to sell, just going back and forth. I think that's probably what the more active traders are doing right now. From a longer term standpoint, you need a risk appetite scenario that's very bullish to have this thing rally significantly, or very bearish to have it sell off significantly. Do keep in mind, this is a pair that will be intervened in by the Swiss National Bank. This is how they measure the franc more than against the dollar. So if the Swiss franc starts to strengthen way too rapidly, they won't hesitate to get involved. They've proven that more than once in the past. The euro looks pretty strong against the Japanese yen. Again, this is a scenario where we're looking at the election and its importance. And right now, it seems like the whole world thinks that the Japanese are about to get very loose with their monetary policy. I would like to see a little bit of a pullback in order to fill the gap. I don't like chasing these gaps all the way up to these skyrocketing levels. I mean, quite frankly, if you put on a position now, you need to have about a 300 pip stop loss bare minimum. So a little bit of patience could go a long way. And if we were to drill down to the hourly chart, you can see that the 174.70 level was basically where we opened. And then if we fall below there, 173 would be an ideal entry. But of course, the biggest problem you have is that phrase right there, ideal entry. I don't know that you get an ideal entry here, but you most certainly could see something close to it. And that's essentially what I'm actually hoping for at this point. And here we have one of my favorite pairs, the British pound against the Swiss franc. The interest rate differential makes this one interesting if you're long, that is. It is worth noting that we have a pretty significant support level at 1.06. And if we can hold that, I think it could send this market much higher. I would also go so far as to say that maybe it's not just a support level, but it might be a support zone reaching up to the 1.0650 level. The 50-day EMA currently sits at the 1.0777 level and is dropping, so we'll have to watch that. But if we can break over that 50-day EMA, that would be a good sign indeed. Now, typically, this will move based on the franc, not as much on the British pound. So if we see the Swiss franc losing value against multiple currencies across the board, you then have a situation where the British pound will probably follow. Breaking above that 50-day EMA opens up the possibility of a move to the 200-day EMA, which is at the 1.0950 region. A breakdown below the 1.06 level would be rather ugly. We could start heading towards parity, but I also think it's very likely that would catch the attention of the Swiss National Bank, because more likely than not, you would see the Swiss franc strengthening against other currencies, not just the British pound. On shorter term charts, you can see it is pretty messy, it is pretty noisy. But I would expect that if this does end up being some type of bottoming pattern. Bottoming patterns are very rarely clean. They're normally a big mess. Keep in mind, if you are looking for this pair to bounce from this support level yet again, you get paid to hang on to this. The swap differential definitely favors the British pound, so it does help pad the situation a bit for you longer term traders. Shorter term traders, I think, are going to have a few headaches along the way, but it does look like we are trying to go sideways and trying to determine whether or not this level can actually hold. I am bullish, although with a small position at this point. The British pound is skyrocketing against the Japanese yen, as it now is reaching the 202.50 yen area. I think this is a market that, quite frankly, probably goes quite a bit higher. Although, again, I really don't like the idea of chasing a market that is 400 pips higher than it was when it closed on Friday. It's very reckless trading, and unless you can trade with a small enough position to have that 400 pip stop loss, really at this point, what you're going to be doing is waiting for some type of value in the form of lower pricing. I think at the very least, you'd like to see a move to the 200 yen level, but as things stand right now, there's just no sign of that. This is a market that looks ready to go much higher, but keep in mind, this is a very volatile pair. Don't be surprised one day if you wake up and you turn on your charts to find out that it's down 130 pips. That's just the nature of the dragon, as it were. I don't see that changing anytime soon. Looking in the Canadian dollar Swiss franc pair, you can see we just continue to grind lower. And this is a microcosm of everything I know about the Canadian dollar at the moment. It just can't pick its feet up. Every time it rallies, they sell into it. I think that continues to be the case going forward. We are testing a large round number in the form of 0.57. So maybe there's a little bit of a reaction. But I would assume that anytime this market rallies, you need to be looking for an opportunity to start selling. Quite frankly, it just has no strength whatsoever. And although I did suggest earlier in the video that the Swiss National Bank will more likely than not get involved if things fall apart, I also recognize that they're not overly concerned about the Canadian dollar against it. I have no idea what the amount of trade between Canada and Switzerland is, but it's probably not enough to warrant central bank intervention. Rallies at this point in time just look like selling opportunities to at least the 50-day EMA, which is a good 75 pips above. This is a typically fairly quiet pair and does tend to trend for long periods of time, and that's all we're seeing. At this point, I think you continue to look at each and every bounce as an opportunity to buy the Swiss franc and sell the Canadian dollar. The Canadian economy has really struggled as of late, as it lost 65,000 jobs in August, and then on Friday we might get more bad news. So I definitely would keep an eye on this as a slow grinding type of pair. Speaking of the Canadian dollar did rally quite nicely against the Japanese yen. But again, this has to do with the Japanese election, and out of all of the currency pairs that are denominated in yen, this would be the last place I would be throwing a ton of money, just because of the weakness of the Canadian dollar. That's not to say that it can't go higher, and I think if we can break above the 108 yen level, it could open up a move to 109 yen. But it's just that the Canadian dollar is going to struggle in relation to the British pound. The British pound will advance much quicker and much further. So while I do look at this as a bullish pair, only because it's denominated in yen, the reality is it's pretty much an outlier. So it shows how weak the yen really is, but it doesn't necessarily entice me to start buying anytime soon. Looking at the euro against the Norwegian krone. So this is a market that is typically range bound, and you can see that it still is. So right now I have 11.4 as your support level on the longer term charts. I also have a resistance level right here at 11.75. And again at, I would call it basically 12. So it looks like we're just kind of bouncing around between these levels. This is a market that I think is going to drift a little bit lower, and that will be especially true if oil starts to pick up. The Norwegian krone is a proxy for crude oil, as the kroner is often traded by European traders who don't necessarily dabble in oil futures. A breakdown from here does open up that 11.4 level, and I do think we try to visit that, but we'll just have to wait and see. If we can break above the 11.75 level, then we could go racing to the 12 level over time. We'll just kind of have to see how that plays out. Right now, it looks choppy more than anything else, and therefore, I think short-term traders will continue to trade this from a range-bound perspective. The euro against a Swedish krona looks like it's rolling over a bit. You can see that structure is definitely negative. We bounced towards the 11.08 level and then just started falling. There should be some support at 10.89. If we break that, then I think we go looking to the 10.78 level underneath. It's probably going to take some time to get there, but it is something worth considering, as it is in a strong trend, despite the fact that we recently bounced. This is definitely a pair that you have to be patient with. It takes its time getting to where it's going. Yet another yen-related pair, and you can see that the New Zealand dollar has skyrocketed against the yen, basically finding itself 200 pips to the upside as I record this. Again, unfortunately, this is a situation where if you didn't get involved in it, like right at the open, or you weren't in it to begin with, you're probably going to be playing a dangerous game chasing the New Zealand dollar here. 87.25 could be thought of as support, right along with 86.65. And then, of course, if we fill the gap down to 86, I think a lot of traders would be interested. I do see resistance just above at 88 yen, and then again at 88.75 yen. Keep in mind, all of the yen pairs look like this. They look like this is yen selling, but overdone. So I think the rest of this week could be rather interesting. I do think eventually you get a pullback, and that pullback I look at as a potential buying opportunity. I don't have any interest in trying to short this to fill the gap like some traders will do. It's not really something I'm keen on doing anytime soon. New Zealand dollar, Swiss franc. So this is a pair that has rallied during the day, but you can see it's clearly in a negative structure. I don't see any reason to be a buyer of this. And honestly, if I were to look at the Swiss franc and wanted to sell it, I would probably be buying US dollars, if anything, against it. This is a market that here against the New Zealand dollar that is very choppy and grinding. But the nice thing is, if you get a good trade going, you can just let it run for ages. The interest rate differential, of course, favors New Zealand. That's one of the problems you have here. But over the longer term, if we start to see bullish pressure, then this becomes a very intriguing long position. One that I wouldn't hesitate to put on and hold. I think this is one of those opportunities to collect swap that you have to take advantage of if and when it shows up. As things stand right now, though, the 50-day EMA is right about at the 47 level. And 0.47, I think, is going to be difficult to overcome. If we break down below 0.46, we could continue to see quite a bit of significant selling pressure. The New Zealand dollar against the US dollar has rallied nicely during the day, but I mean, this is a pretty ugly structure. And again, it's just underperformed a lot of its contemporaries. So I don't know that the New Zealand dollar is what you're buying against the US dollar, at least not right now. I will say this, though. The rally during the trading session was fairly impressive considering that we gapped lower, but I'm looking for signs of exhaustion, maybe long wicks or a rejection at the 50-day EMA to start shorting the New Zealand dollar. Again, I think it could offer a nice opportunity going forward, but we'll just have to wait and see. The US dollar against the Mexican peso continues to be very negative, and this pair is quite a bit different than what I think a lot of you are out there used to trading. So, number one, the interest rate differential favors Mexico. But not only that, you have a situation where Mexico is the world's largest exporter to the United States. It's not China. So this has an inverse correlation. If the U.S. economy is doing really well, it favors the Mexican peso because of a couple of different things. There'll be more demand for Mexican goods. There'll be more investment in Mexico, and you get paid to short this pair. On the other hand, and this is a little counterintuitive until you think about it, if the U.S. economy starts slowing down, this is a pair that rallies. Why is that? Well, because Mexico doesn't have its biggest customer knocking down the door to try to buy its goods. So in other words, people shun the peso, and quite often the Mexican central bank has to start cutting rates. Most of the time people are running to the US Treasury market for safety. That drives up demand for US dollars in that type of scenario. The next chart we have is light sweet crude oil, or US oil. This is a messy market, to say the least. I think we're still in a situation where there are concerns about global growth and demand. $62 has been important on both sides of the trade, both support and resistance. But now I think it represents a zone between $62 and $60. We bounced, we broke the back of an inverted hammer from the Friday session, but failed to break above that crucial $62 level, which tells me that I think we're going to continue to struggle. Global demand is a question mark at this point, and you have to keep in mind that the Russians, OPEC, and America are all pumping out as much crude oil as they can, and it really will have a major influence on where we go next in this market. I think we just have way too much in the way of supply for the current demand. The NASDAQ 100 continues to just take off. I mean, at this point, we're above the 25,000 level. And looking at the shorter term charts, I think you have a scenario where you just have to look at any potential pullback as a buying opportunity. You can see 25,000 has held fairly well on the hourly chart. We did slice through it a couple of times, but at the end of the day, it seems like it's doing okay. The 24,800 level is an area I'll be watching as well. But really at this point in time, I just don't see a world in which you're shorting the NASDAQ 100. It's just far too bullish. The S&P 500 finds itself at all-time highs, and we are on our way to 6,800. I think ultimately this is the same situation as the NASDAQ 100, which does make a certain amount of sense because there are so many technology stocks out there making up these indices anymore that they behave the same. There is no difference. The S&P 500 and the NASDAQ 100 are basically the same markets these days. Short-term pullbacks offer buying opportunities here with particular interest at 6,725 and 6,710. But it looks like we are reaching towards new highs as I speak, heading into power hour. That's a good sign. So we'll just have to wait and see how this plays out. But right now, I think it looks very bullish. I think we also are going to 6,000 eventually. The Dow Jones 30 has been a little noisier during the trading session here on Monday, initially falling. But we have recovered quite nicely. You can see right out the gate, we had some buyers in Asia, and then we went sideways and plunged. But look at us try to recover on the hourly chart. The 46,500 level seems to be where buyers are willing to step in, and we've had a couple of quiet hours followed by this bullish one at the end of the day. So that's a good sign. I think ultimately if the S&P 500 and the NASDAQ 100 both continue to go to the upside, it will probably just drag the Dow Jones 30 right along with it. So with that being said, that's a look at your financial markets from Hola Prime.
Hola Prime, trade with transparency.